this so-called farm-to-table model that like Lilly and others are pushing forward. I got really jealous of this, Kenny. You know, I love a good pun. My Substack is called Big Pharma Sharma, and I was like, man, I should have called it Farm to Table. That would have been really good. You know, but my wife is the one who thought of Big Pharma Sharma, so shout out to her. She did a great job with that. But Farm to Table is that's a good. It's such a
I
great
do like
name.
that.
It's such a great name. Oh my god, I was just like, dude, great marketing right there. That's fantastic. What's up, everybody? Welcome back to Drug Dealing. Today, we got a special episode for you, which is about our 2026 predictions. So today, you know, just like we did last year, we're gonna talk about what we see in the crystal ball, so to speak, for 2026. But this time, we're gonna go over and grade ourselves from our 2025 predictions as well, and see if you know, see how we did.
Yeah, Shivu, I think there's two ways to think about the grading. Should we grade like our parents might grade us? In which case, I don't think it'll ever be good. Or should we grade based off of actually how our predictions translated? I think the latter would be probably better. Our
Yeah,
parents can handle us.
let's just say our Indian mothers will not be so happy with this report card. This is one to hide from your parents for sure.
As is the norm, though, so it's okay. We have scar tissue for that. And then the other thing I think was important to share up at the top of this episode is that we've been fortunate to get some feedback from folks that have listened. And one nuance that you and I discussed that is likely to be changed in our pod going forward is to perhaps stick with the monthly cadence, of course, but also perhaps have shorter episodes to try to deliver more quick hits for folks that may not have the time to listen to everything in depth. But of course, when we have an interview from an esteemed professional or someone who has meaningful insights, those are probably going to run longer. But the goal of maybe being less than an hour, if Shiva, we want to help people understand maybe you've exhausted all the medicines you can take for your particular condition, but there are potentially experimental options for you. How do you navigate clinicaltrials.gov, a publicly available website to everybody? Or how do you use PubMed to help yourself get better care and understand what's out there? Those things are topics that we can cover, likely in less than an hour. And I think brevity has value to it. So I think it was good to share up front with everybody that that's going to be the approach. Again, welcome feedback on this style, and that's what we'll be going for starting this episode and beyond.
Yeah, and welcome feedback on the focus areas as well. I mean, I think we've done over the course of this past year, I think a pretty 50-50 split on topics that are, you know, more about patient care and how we as people in the drug development industry, what tools and resources we use, how we think about healthcare in general versus, you know, kind of more industry specific insider type topics. And so, you know, open to feedback, to further feedback from our audience about, you know, what is most interesting to them. What are you not getting from other sources that you'd like us to discuss?
I think also, Shivu, when we do things like that, our goal was to, correct me if I'm wrong, put the content on the screen with our faces maybe in smaller tiles so people can see how we navigate, how we search for stuff. You and I are kind of used to living through those websites daily. I think you and I probably leave those tabs open during our workday. That's how accustomed we are to the interface. But
I'm
I
a
think that's
Kenny, you don't know this about me. I'm a closed tabs thing. Once I'm done, I close all my tabs. I think it's like psycho of these people who, you know, you see their screen and they have like 95 tabs on it. Their RAM is just like all the way down to just like sputtering little bits of RAM. I'm like, you know, I have like 3 tabs open. I have a lot of screens open, but I'm not like everything in one tab kind of thing. I think that is like, you know, that is its own type of psychosis.
That's why this podcast is fun because we're different. I tend to have 20 tabs open at any given time, and I leave them open until I feel like I've exhausted. So I have tabs that are maybe stale. Even the browser will do that dashed circle around the content because I haven't opened it in so long. But I thought we would walk people through live how to navigate it as well. And on some things, even though we'll be brief, we'll go slow and methodical because if it can help folks, we want to, that's the primary goal.
Yeah, absolutely. So look forward to that over the course of this year. Without further ado, should we get into grading ourselves? You know, we'll ask our parents not to listen to this part of the
Yeah.
podcast.
Yeah, it feels like I'm walking home, that long walk home with that piece of paper that tells
Yeah.
everything.
Although let's be honest, like our parents would have been like, "Yo, you got an A, why not A plus? You know, A plus is better, you know?" So we can never make them happy when it comes to grades.
It was never good. And even if you got an A plus and they knew that was the max scale, it was a very tepid response. There
Yeah.
still was just a lack of excitement. It's just assumed.
I've in school I once got like 100% on some, you know, some test or something like that. And my mom literally asked me like, "Why not 101%?" There's no extra credit on this, lady. Come on.
Yeah. So goes our life. We'll try to be nicer to ourselves and to each other. Let's go about it that way.
Let's do it.
So with my 2025 predictions, I think it's good to remind everyone that the first one was about M&A. And what I essentially called was because the M&A for biopharma in 2024 was so bad, my call was in somewhat very much a reverse to the norm, mean a reversion to the mean. And so saying that is not, I don't think that unusual when you've had a bad year to have the following year be a bit better. So one of the things I mentioned was that in 2024 there were no transactions over 5 billion in enterprise value. And I think that's quite notable. Obviously, you just think of Novartis and Avidity. That one was more than twice that. So there are some deals that were massive in 2025 that went well. And so I essentially was a call that M&A is going to be a lot better and the theme will be more activity for assets that have shown scientific translation into clinical or commercial promise. That was the phrasing I used last year. I'd say for this, because there was a big rebound in M&A last year, in particular, much of it occurred in the latter half of the year. I'd give myself an A. If it was one of our parents, I'm sure it would be much lower, but I would give myself an A for that. We rebounded. There were some large deals like Novartis Avidity. You know, there was FGF 21 transactions along the way as well, two if my memory serves. So there were some good sized deals. The average deal size was meaningfully larger. I think the prior year in 24, the average deal size was only 2 to 3 billion. Last year, I remember seeing an average from one of the sources of maybe 4 to 6. So we were meaningfully higher, and it did hold true that late stage or near commercial assets were more valued. So that was my first one. I'll pause there, Shivu, to see if you have any thoughts about that one.
Yeah, I think that's a fair grade. And we talked about it in our we kind of touched on some of that topic in our CVR episode. So, you know, if people want kind of a deeper dive into reviewing both the review of the M&A from 2025 and some of the trends that we were seeing in how deal structures were working for acquisitions, that's another good podcast to go back and click through. Yeah, why don't you go through your remaining predictions, grade them, and then we can. I'll do the same. We'll reflect on it, and then we can go to 26.
Another one is a call on the macro. My call was that biotech tends to perform well in years where investors need to be defensive. And given the performance of the last 2 years, I thought it'd be difficult to have another 20+% gain. But biotech can be a place where investors are going to look for returns. And so I gave myself a B. We rebounded and we actually did, I think, over 35%. I think the exact number for the XBI was 36%. So we did rebound, but that was largely due to stabilizing interest rates. Shivu, it's just the correlation is profound. If the Fed is not going to raise rates any further, stabilizes, and or starts to lower, the XBI almost always reverses its downtrend. And that's exactly what happened in 2025. Certainly M&A helped in the latter half of the year, but just in general, my call on it being a defensive place, given where things have gone, it didn't really line out in that way. It did well largely because of the old saying, don't fight the Fed. So I would give myself a B. I was directionally right, but the rationale didn't line up. The last one I had was that there are some therapeutic areas that haven't seen much innovation lately. Cardiology is one of them that I called out as potentially being very interesting. And I thought that cardiology could be at the cusp of in 2025 or on the near term horizon, a Cambrian moment as the disease that some diseases that are treated with small molecules start to shift into larger molecules, long acting injections, and things like that. I would say that there was some trend in that manner. But to say something has a Cambrian moment, which is a flashpoint of profound change, is a strong claim, and I would say that did not happen. So this one would probably be in the DF range because it didn't translate yet. If we were to hold a longer term view, it's very likely to happen just because of the innovation in the space. But I had hoped that it was going to happen a bit sooner than where we are now. It didn't happen in 25. So I'll share more in the future because this is a space I'm actually working in right now, and it means a lot to me. But we didn't get that Cambrian moment in cardiology that I thought we might. So those are my three: an A, a B, and a D. Definitely not a great scorecard. And I'll turn it over to you.
I think what you'll find with my grades too is similar to what you said about cardiovascular metabolic disease. That's one I think we both were pretty bullish on as well. Just the reverse, like a larger reversion of interest, partnerships, deals, acquisitions, etc., back to kind of the old school big pharma indications like psychiatry and hypertension and dyslipidemia and things like that. And I think that's still on the horizon, honestly. I think we're maybe just a year early, so to speak. So yeah, I think that those are very fair grades. Just to recap on my side, then my first prediction of last year was that Vera Therapeutics was going to get acquired. So this was a company working in a rare kidney disease called IgAN. They, have a kind of an immune intercepting MOA, and there was a lot of other acquisitions in this space. I kind of like leading up to this last year. I think there were kind of rumors and still are rumors that Vera is going to get acquired. It just didn't kind of happen this last year. I still think, it's probably going to happen over the course sometime of 2026 as they kind of push towards some important phase 3 readouts. So that one, I gave myself like I'll give myself like a D plus or something like that on it. I think it'll still happen as just maybe a year early. The next prediction I had was about a reversion in oncology deal interest towards bispecific antibodies. So moving sort of away from what the trend was previously of antibody drug conjugates back to an interest in bispecific antibodies. Obviously, over the course of last year, we saw so many different bispecific deals. I mean, there's a lot of density, obviously, in like this PD-1 VEGF space, right? We saw folks like BMS and Pfizer and BioNTech kind of do deals in that space overall. But even outside of that space, I think a really big surprise that we discussed slightly in previous pods was, Merus getting acquired by Genmab, right? They have a bispecific antibody for head and neck cancer. And, there was a bunch of other deals, DREN Bio, all these other, bispecific antibodies or T cell engagers. And so I give myself an A on that. And I think that's still an interesting space to watch moving forward. The third prediction that I had was about the AI cliff and the AI pullback. Just that, we had seen all this investment in AI up through 2024. We honestly saw a lot more investment in 2025. But the prove it state of AI, where it's kind of like, hey, we invested all this stuff. Are we getting drugs that are coming out of this? Are we getting positive clinical trial results? Are we moving closer and closer to an approval of a AI generated drug? I mean, I would give myself kind of a mixed review on that. Like, we've frankly seen a lot more investment, especially from big companies like Lilly, just investing a ton of their capital into this space and trying to set themselves up for success on how drugs are going to get developed in the future. But at the same time, there was big AI drug development companies like Recursion, whose stock just completely kind of tanked over the course of last year because they had done all these deals, built this big pipeline, hadn't quite, investors looked at it and said, where's the path to revenue for this company? Not to say that they aren't going to be successful. I mean, again, science is hard, especially now when you're blending science on a chip with science in a lab and in patients all together. So I give myself a mix on that. I probably give myself a C. And then, the last one, I think there was like a bonus prediction for us was digital ad spend, seeing that increase kind of to new heights. If you kind of look at all the numbers, I think it's pretty clear. And just turn on a TV nowadays. There's GLP-1 ads every single chance someone gets to give you a GLP-1 ad. There's a GLP-1 ad. There's a Skyrizi ad everywhere. So I think this is going to continue, right? Digital ad spend. Pharma's seeing that this is good bang for your buck, especially with the new wave of medicines that are a lot more focused on these broad, big general indications. And so I think we'll continue to see that. So I give myself an A on that. So, two A's and, a D and a C. I don't know what that math averages out to, but, I'll say like, I think on some of these we were early. Never wrong, just early.
Yeah, I think Shivu, you had good predictions. I think your scoring is right. It's hard for something to happen in a fixed 12-month window. Is your prediction that bad if it happens at 15 months? Is it that bad if it happens the following year? It's not necessarily about time sensitive. I think if you're going for a drug approval, that's different. But I think in general, AI trends, D2C spend or just in general pharma spend, things like that. I heard an interesting metric. That's something I was working on myself. About 1 in 6 Americans, Shivu, has given themselves an injection at home. And so when you think about that impact and what it means that patients have the ability to treat themselves, obviously drugs like the GLP-1s, maybe even the migraine medications, I believe as well, they're in that space where you can not need a healthcare provider to help you administer a shot. So some of those trends, I think what you were saying regarding spend, accessing the patient, definitely makes sense. Your comment on Vera, I think it's probably one of those companies that over time, I don't know it as well as you. It's actually a local company across the street, not far from me. But I do believe as their data has looked good, at some point you have to believe either they'll try to go it alone, like Insmed, which is in this pulmonary indication that's done really well. They were there's so many conversations over the years that they'd get taken out, but it seems like they're just going to get the funding to go alone, and maybe they'll be the next big mid cap or something like that. Maybe Vera will be that. Maybe Vera will be like the next, good mid-size org, or it does get taken out. Either way, when your data are good, which I think is the baseline of your call, right? Why would something get taken out? It's because the data are promising, it makes a difference for patients. In a way, I kind of think that when we marry ourselves to a particular synonym or a particular a phrasing on how something might happen to an org, it's undergirded by a particular thesis. In Vera's case, the data are good and are meaningful. So again, if it gets taken out in 2026, I have no position, by the way. I think in general, it's not that your call is wrong. So I think the time sensitivity makes things a bit difficult, but overall, very interesting predictions. And wondering, do you want to move into your 2026s now? I'm just curious, since you just mentioned your 25s, if you want to continue on.
Yeah, let's move into 2026. I had one, like bonus prediction, I guess, that was somewhat related to what you said. I don't know how much I want to grade myself on this, but I'll throw this one out just because it's a nice segue to what you said. I mean, so you brought up a really interesting analog in Insmed in the conversation about Vera. I think this is something we kind of pointed to a little bit over the course of last year, especially in that deals episode that we did. But there's this growing biotech middleweights, these companies that are specialized in one area, maybe have like a pipeline and a product type setup, and are probably like too big to get acquired, right? And it can happen, and what that sets up is one of like one of two things, right? They can either try and force a deal and get acquired by some big company, but it might be tough given the size, right? You and I know this, but like big pharma companies, big biotech companies, they're kind of like pythons in some ways. Once they eat a big meal, it like takes some time to digest, right? Like have you ever seen those videos of like a python eating a deer in the jungle or something like that? They're moving like slow and sluggish afterwards. So there's like not a ton of momentum that they can handle, especially doing like a big, 20, 30, $40 billion acquisition. I mean, we kind of see it with RevMed right now, right? Like there was this, I think a really solid company doing really interesting things in KRAS biology. But they have this huge run up, and now they're kind of like worth $30 billion and stuff. And there's not a whole lot of companies who can acquire them just with kind of their existing war chest. They might need to tap into debt. And so that causes some pause with how these companies think about the acquisitions, right? And so one of my minor predictions, I guess, is that, we might start to see, because of how much interesting biology there is from these sort of middleweights and kind of the hits that we've been seeing, that class, that group of companies. I'm thinking of companies like Argenx and BioNTech and RevMed, and I could see a company like Vera moving into that mix. Insmed was one that you mentioned that I think is really solid. Alnylam, who is like pretty much the same size as Regeneron now, which is kind of insane. So there's this larger group of companies that I think is growing, that's like creating this middle weights or welterweights, whatever you want to call it. And I think we might start to see more companies kind of move into that class, right? More specialized players who have commercial footprint were probably too big to get bought outright at this juncture. We might start to see more companies like Avera move into that class. I still think Vero is probably going to get bought, but we might see other companies move into that space more more presence and density of the companies that exist in that space as well, kind of being players on deals, players on, small acquisitions, commercial players, kind of muscling out some of these bigger players, especially in kind of the more narrowly focused areas that they're in. So we could start to see a reversion to that. I mean, that's kind of how this space was, back in, kind of like the 2010s or so, right? This was like the old days of, you had, I think, Jim Cramer, who's, obviously like wrong about wrong about everything. He had this interesting phrase of like the four horsemen of the biotech apocalypse, which at that point was like Biogen, Celgene, Gilead, and Regeneron. And they were these four kind of very specialized companies in these particular areas that were like growing and growing and growing. And were for the most part kind of like too big to be bought. Obviously, Celgene kind of got taken out, a long time later for like this giant 70 plus $1 billion acquisition, but those are really rare and oftentimes, not what big pharma companies want to do.
Yeah, I think it's a good point. That class could make a return. It's a good reminder, by the way, that we did cover some of this in detail. When I think about, these big companies versus small, the other consideration I have is what does it mean for innovation in the sector? And they also are going to have pipeline issues too. So if you think of Vera, you think of Argenx, which is trying to hit everything with that IgG knockdown or in general IgG reductions. There's always going to be a pressure on them for what's next because a lot of the valuation of what they're trying to do is generally for the most part baked in Insmed, what's next, even though they've had an amazing run. And so I think it's interesting in general because it could be if you think about it, if you're a tiny microcap biotech with just an idea and you're very early stage, maybe even preclinical, it could mean that instead of a big pharma takeout, there could be some mid caps, assuming you're not like a big primary care indication where you actually need a sales force that's massive and across the country. Maybe it means you don't have to rely only on big pharma transactions. If things are favorable in the mid class of these companies that we talked about, I haven't looked at Argenx's balance sheet in a long time, but I have to believe they're well capitalized. I know they've had one of the best drug launches of the last decade. So when you think about that, or Insmed as well, I don't recall their balance sheet either, but I do know they're very well capitalized, and that CEO's been there a long time. I think well over 10 years, if not more. So I think it's good for the space. And to your point, once they reach a certain size, like RevMed, it's difficult to take them out. Even think of, Summit, which has an unusual ownership base. It's at a cap. It's not even that high right now, if I'm not mistaken, but it's at a peak sometimes when it was in the upper 20s, lower 30s. There was a question of who can afford that,
Yeah.
even though the indication is potentially one of the biggest of our time. So I think it's a really interesting thing. I feel like for the most part, it's good for the sector. It adds another layer of innovators that look at risk differently. You and I lived through some companies that went from, a more risk tolerant to a more big inertia based org. And the way they look at risk is fundamentally different. So in a way, I could see this as being a big spur, a catalyst, positive one for the sector.
Yeah. Well said. You want to go to your prediction?
Yeah. So I'm not I don't have that much time in finance, but I do think a lot about finance. And I think it matters a lot in biotech. And a lot of the classic scientists I know, they don't really care about economics or finance. They think of it as like a fake science, which I can totally understand why they say that. But we have to mind it because we have to fund what we do. So going along my trend that you don't want to fight the Fed. What are we entering? A period of either stable interest rates or maybe a bit lower. And there's a lot of contention right now between the White House and the Fed that we don't need to get into. But if we just stick through the very specific lens of rate stabilizing and perhaps being lower, it suggests, Shivu, that longer duration assets like biotech will do better. Now, last year was an inflection period where it went from rising to normal and then maybe lower. And that's when you tend to get some of the best gains. Well, what do we see in the XBI for 2025? It was exactly 35.9% positive returns. Pretty strong. 2024, it was 1%. So it was a bit of a reversion to the mean, averaging out what's a good typical return. When I think about 26, we don't have another inflection period. So assuming rates are stable or go down a bit, I envision a year, and again, M&A is a factor in this as well. I envision a year where the XBI or biotech sector in general can do well. I don't know about 36% well, but I also don't think it'll be a 1% year like 2 years ago. So I think 2026 is going to be a year that's generally strong. And I have some other predictions that layer into this. And because our comps, year over year, last year was 36%. I don't see us necessarily exceeding that, but I do think we'll do much better than 2024. So that's my call is kind of an old economic call that we're not going to be fighting the Fed. We're a long duration sector of the world and the market, but we should do better than what we've been doing the last few years. Last year being an unusually strong year.
Yeah, I see the cards lining up for that for sure. I mean, even you and I were both at JP Morgan Week, let's say in San Francisco. Big talking point too. The pulse was just that acquisition behavior is up from the biggest companies in our space. IPO windows are opening up, like a lot of these big companies. Company like Icon Therapeutics, who had like raised billions of dollars and has an interesting platform, and even like acquired some assets and things like that. That kind of company is ready to mature and go into the public markets. And so all of that is going to like free up a lot of capital that I think will just get reinvested into some of these smaller companies that I think is all healthy and good, for the sector. So I see the cards lining up for that. Again, like I agree with you, probably not going to be some like 36% year, right? But and I think it's going to be a strong year for the sector.
Yeah. So I'll keep going, Shivu. I'll get your
Yeah,
feedback and then
go
we'll
for it.
switch over to you. I think the next one, it's important to talk about the main regulatory body in the space is the FDA. So 2025, it was difficult to watch the various changes because there were some people, you may have a um, contentious view perhaps on some of their positions, but in general, there was a lot of churn from people who were there to help patients get medicine. That's just how it was. And I had colleagues in the space, they were getting on calls with the FDA. And in the beginning, if you remember the Doge people, in the beginning when Doge was just coming in and throwing people out, I had a couple of friends as sponsors getting on calls with the FDA, and there might be a roster of say 13 to 16 FDA participants joining. And before the video activated, they heard the FDA employees saying to each other, "Oh, I wasn't sure if my badge was going to work today." I things like that are difficult to hear because how are you tasked to approve a drug that could impact millions of people for decades when you don't know if you can even access the building? I'm not even talking about compensation. So that's the background of the last year for the FDA. What am I calling for this year? I think the FDA is still likely to endure profound changes, but I think the greatest changes are probably behind us because I think the head of the HHS has put his stamp on what he wants. I think much of that is baked. I think still being in vaccines or some of these other things is going to be a troubled space to be. But also, you've seen the head of the FDA is trying to reduce or relax some of the requirements to get a drug approved. And that's countered by some of the RCT maximalists that you and I have talked about. And so, my call is that the FDA is likely to
And the
still,
protein bros and the
yeah,
protein bros.
my call is that the FDA are likely to still endure changes that are probably going to nauseate some of us industry participants. But I think the worst ones are the most violent ones, the ones that have the most movement to them. I think most of those are probably behind us, with the caveat that the head of the HHS is not has no reverence for science. So there could still be some things out there that come out of nowhere. But I do think if the FDA gets settled a bit and loosens some of the restrictions for some of the more challenging indications where maybe they don't need two phase threes or something along those lines, I think what it could do is it could excite some of the innovation in the space. Because when you think about capital allocations, you think of, oh, my cost just came down. I'm okay to try this. The risk wasn't justified at two phase threes with that much cost, but I'm willing to try it like this. What that could do is actually, people talk a lot about drug pricing. That could actually help bring prices down because of competitive forces, old economic rule. So I could see the FDA being in a place where it starts to instill some rules that are a bit friendlier to the industry and that could help catalyze innovation. But again, the head of the HHS is a bit of a wild card and not tethered to facts or logic. So we have to see how things go.
I think that's a great take. I love it. I think there's a couple things. So there were some common threads that I heard from some of the JPM commentary as well. Recently in my latest newsletter, I went back and looked at all kind of the big biopharma transcripts and tried to tease out some interesting insights. And there was, on kind of the macro stuff on the policy overhang, there was this larger feeling from that I got from reading those transcripts that, on things like MFN, most favored nations, on the Inflation Reduction Act, on tariffs, there was like resolution there. I think, a lot of the pharma CEOs were kind of like, hey, we've accounted for that. We're past it. Like, we're ready to just focus on getting things done. And I think your commentary hits that same chord, right? Like there's, you're kind of saying like, hey, there's this feeling of, we're through some of the volatility perhaps, and we can just focus on getting consistent feedback from the FDA and from the other kind of healthcare regulatory bodies. I hope that's the case. I mean, you never know, obviously, with this Trump administration and the HHS and all that, right? They can be very capricious. I think my issue with this FDA, in addition to like on a broad level, obviously we've talked about specifics before, is that there just seems to be a lot of inconsistency, right? Like you say one thing and you do something else. And I hope we're past that. And if we are, I think the entire sector would really benefit from just consistency, right? Like if this, then that, like have them work a little more algorithmically and predictably. And I think whether that's good or bad, whether that makes things harder to get drugs approved or easier to get drugs approved, the consistency is appreciated.
Yeah, I hope so too. We'll have to see how that unfolds. My last prediction is in the metabolic space, and
Okay.
so specific to GLP-1s. I was thinking a lot over the holidays about how big this space is and how at JPM after the holidays, I was seeing so many CEOs who are trying a nuanced approach for weight loss or diabetes control, things like that. And so when I was thinking about how big it is, and essentially right now it's a duopoly, but it may not stay that way between Lilly and Novo, I was just looking at how many big pharmas don't have a meaningful foothold in obesity and diabetes or the GLP-1 space. And so my view is on this, it may not happen in the next 11 and a half months. My view is that there is very likely to be a big pharma move from one of the companies that doesn't have a meaningful GLP-1 presence or GLP-1 asset like presence in the obesity type 2 diabetes space. Now, you and I know that there's an old phrase we use a lot, me too mechanisms, a drug that's similar to what's already out there. What does that really get you? You might be third or fourth or fifth. What does that really mean for you? So could they be going towards some mechanism that helps on sarcopenia, muscle loss, things like that? I don't know exactly how that might unfold and what targets would be more attractive because the space is one of the most active I've ever seen in my life. If you look at the landscapes, I'm sure you've seen them online. It's incredible how much activity there is and innovation. It's great. Well, I was looking specifically at companies like BMS, who has no meaningful presence from what I could see in metabolic, GSK, J&J, Merck, who has one asset in MASH. Those companies, I have to believe, given the various patent cliffs and revenue cliffs they're looking at, sure, they might try things in immunology and oncology, but I have to believe they might be looking at other things as well. And some of them have more than enough cash to make a move, if not for a larger player, then maybe a mid-sized player or earlier stage. So my call on this is that at least one other big pharma where when you visit their pipeline page doesn't have a meaningful GLP-1 or metabolic presence will enter in 2026
Yeah.
because the space is too big. And I feel like sometimes we've seen it before, Shivu. Some of these companies have FOMO. And I'm not saying that's the reason why they might do it, but the space is big and maybe being fourth is not that bad.
I mean, we saw it with PD-1s, right? Everybody had to load up and buy their own PD-1. The risk though is that, when is enough enough? Like how many of these drugs can of the same class can a market sustain? Especially if you're only focused on obesity. And I think in the PD-1 example, we saw a lot of companies get burned, right? After saying like, hey, PD-1's this big mechanism, seems to work in every cancer, it seems to be relevant, we got to have our own. And then it kind of got commoditized, right? And some of that is the push, the commercial push and the deals push that folks like Merck and BMS did. I thought they did a great job of just, you know, commoditizing themselves in some ways with some of the deals that they did, doing tons of just clinical supply agreements for companies who wanted to combine with PD-1s. I mean, that is like a really interesting strategy for folks like Lilly and Novo to kind of make it harder for new entrants to come in, is let's just make this really easy for people to combine with, right? If one of the futures of GLP-1s is going to be combinations, let's just make it really easy for people to combine with us and, drift off of, their science. And so I think we could see that too. I mean, I like your prediction. I will say, I don't know that there's like more for another GLP-1, like a GLP-1 based asset other than like one or two more. And I think after that, it's going to get really,
I agree.
really, really crowded. I mean, there's obviously some companies like like Viking and Structure that are like really hot and kind of, thought of as potential buyout targets, which I think I could easily see either or both of those companies getting taken out. The appetite for it is probably big. But I think you've already started to see some companies comment that they think this space will get commoditized. I think Gilead's CEO came out and said, we're just probably not going to play in this space because we think, this space is going to kind of get commoditized. I'm kind of bastardizing some of Dan O'Day's comments, but effectively that was, what he said. We are living in like a GLP-1 focused world, right? Even airlines are having to think about GLP-1s, right? How does it impact their fuel costs? They're going down. So,
It's amazing.
that improves our margins, right? Candy companies are having to think about it. Restaurants are having now marketing GLP-1 friendly meals and things like that. So, I mean, it's so obvious that like even if you don't have a GLP-1, you're probably in an indication where you're competing with somebody who has a GLP-1 where that mechanism of action we might find that it's relevant, or it's in an adjacent comorbidity where it is relevant, or you're treating patients who in as are going to be on background therapy that does include a GLP-1. So everybody needs to have a meeting about this and go, okay, how does this affect our clinical development strategy? Do we want to get into this space or not? And if so, I think people really need to think about differentiation. I thought at JPM, Roche kind of they had a nice slide where they kind of looked at kind of these 6 unmet needs in obesity. And they talked about it's like maintenance therapy, tolerability, the weight loss plateau, lack of response or insufficient response, comorbidities. And then the last one was muscle preservation. And I think the space is obviously going to be super, super big. If you're going to be late to it, you got to carve out, a differentiated position for yourself. And especially if it's just obesity, it might be in one of those kinds of areas, right? And, this is like you can be like a specialty product in this space and carve out a nice $10 billion like position for yourself. I mean, that's how big it is. You can be, the fourth biggest GLP-1, fifth biggest GLP-1, and the spaces might be big enough to get like a, $10 billion product or something like that if you focus on, which category, which subsegment you want to be a part of, right? So, I mean, related to this is kind of good. One of my one of my predictions was actually that I think we're going to see kind of like a pivoting of some of these GLP-1 companies, these buyout targets into some of these other areas, one of those 6 areas that I mentioned. Like, again, I think there's probably room for 1 or 2 more big acquisitions in just this like standard GLP-1 based, backbone asset type of space. And other companies are going to have to start to pivot to go like, okay, we have this GLP-1 asset. Can we start angling this in some of these non-cardiovascular metabolic disease indications? How does this work in skin inflammation? How does it work in CNS disease? How does it work in addiction pathology and things like that? Should we start looking into like muscle preservation and more maintenance regimens and things like that? So I think it's going to cause some of this level of, this swath of like small biotechs who are all trying to, develop their own GLP-1 or to pivot a little bit, because I think they're probably going to see too that like, hey, you know, there's probably like maybe 1 or 2 more of these big GLP-1 based like anchor asset acquisitions that I think I can see the big companies doing, and everyone else is going to have to kind of figure out like, okay, how do we differentiate ourselves to create value?
Yeah, you know what's interesting is I hear you on that. The differentiation is key. Part of the reason why I thought there might be, and it seems like we agree that there's room for others to enter, is that I feel from a lot of management teams, there is this feel that we need to have a position. We'll get our beachhead position and then differentiate from thereafter. And so, what I could also see happening is on the differentiation side, I actually think it goes back to the duopoly. I think the ones, probably Lilly, that are most likely to show some differentiation over time are likely to be the ones who have leads right now. And then there could be this outlier that could surprise people. These myostatins or some other mechanism that I'm not as familiar with could come in and surprise us. So yeah, I feel like there's a lot of potential for some new names to enter, and there's also potential for differentiation that could come from established names. But either way, the spaceship was just too big for me to believe there's not going to be more sales, more
Yeah,
activity.
100%. Should I go to a couple of mine and then
Please.
we can close? So first prediction for 2026 for me is or maybe not first, but like 2.5 is I think a psychedelics company is going to get acquired this year. So there's a basket of psychedelics companies who have interesting late stage readouts over the course of this year. Companies like MindMed and Cybin and ATIG, and there's a whole family of them. Gilgamesh is one I really like also, and they're working on a variety of different psychedelics, either different formulations of kind of classical psychedelic psilocybin, which is magic mushrooms, LSD, etc. And obviously, there's actually been like a huge push from the FDA to treat diseases, psychiatric diseases where these medicines could be really effective, especially things like PTSD for our troops who come back from war and who are just, ravaged by post traumatic stress disorder. There's a lot of great data coming out that psychedelic drugs and pathogens like MDMA can actually be incredibly effective at helping people resolve those psychological issues with very durable responses, which has been really surprising. And so I think, you know, tying back to kind of the theme that we talked about last year, this reversion back to kind of these old school big pharma indications for the biggest players in our sector, I think psychedelics plays a great role in that aspect in psychiatry, right? There's really nothing in psychiatry that I see right now that has shown like the level of efficacy and profundity of just like meaningful change in people's lives than what's going on with psychedelic treatment. And you might think that like, hey, this is some schedule 4 drug or whatever, and big pharma doesn't want to mess around with like the legal stuff with it. My point is that's kind of changing. The FDA is really loosened the restrictions on what's acceptable for that. And on top of that too, J&J basically has a form of psychedelic. They have a intranasal esketamine, which is called Spravato, which is like $1 billion product for them, and there's multiple mechanisms of action that people are working on that are like ketamine related. I mean, ketamine is maybe not like a classical psychedelic in the same sense, but it does have dissociative symptoms that can happen. And it's part of that seems to be driving some of the efficacious response of it. And, we've seen AbbVie, acquire assets as well in this space. So my point is the appetite from the biggest players in this space, they're starting to not be so scared of this, hang of like, oh, psychedelics and stuff, but they're starting to see the real clinical potential with these. And I think for how like managed the care model needs to be for some of these, some of these aren't going to be ones that you can just like microdose at home and take. There's probably going to be some that kind of fit into a maintenance mechanism that way. Some of them are like, hey, you need to be in your psychiatric office. You go through this like really profound psychedelic trip. You have some, consolidated, therapy afterwards. And then, you get this, hopefully this very durable response of reductions in treatment resistance depression and PTSD, anxiety, etc. So I mean the data is just like too good to ignore in this space, and I think big pharma sees that.
I think that's interesting. So I'm out of the space for a little bit. The last data I saw, which was a few years ago, was Compass Pathways,
Yeah,
a
Compass is
drug.
another good company. Yeah.
Yeah, I remember it not having the durability I think people were hoping for. So you mentioned durability as being something that some of them have addressed. If that's been addressed, where you have that tail not wane as aggressively of efficacy, rather, I find that that could be interesting, and I wouldn't be surprised because I'm not sure what else is left in CNS. I think of a lot of degenerative diseases. That's a lot, obviously going to generate a lot of interest in CNS. But what else could be done? So I could see that. I agree that there could be some moves in that space. I've always wondered about the commercial though, promise, where if the drug has to be paired with therapy session or a professional on site, how do you translate that? That just seems like one of the most profound commercial bottlenecks you could think of because that drug will not be used otherwise until you get through that initial hurdle. So I wonder about that. If some of the mechanisms, Shivu, that you've, and again, I haven't looked at the landscape in at least 3 years, but if some of the mechanisms don't have that requirement, that very onerous requirement where you have to go through a therapy session or you can only take that medication live with the therapist and then, by the way, have a follow up, because you and I know how it is in the real world, that just drops off. I could see that if there's a way around that, I could see that translating very well to Big Pharma's desire to be in the space, be the first, make a splash.
Yeah, some are ones that you can kind of take home. So I think the company that I think is really interesting. They're not public; they're private. Is this company called Gilgamesh? And I think they've gone the route of in simple terms, doing kind of next generation versions of psychedelics. So taking kind of the classical, like what targets does psilocybin hit? How can we like refine the molecules such that we can take out some of the dissociative symptoms that come with it, the trippiness, so to speak, of it. And I think they had some data recently in a phase 2 study in depression for kind of a novel psychedelic that, didn't really have major dissociative issues, showed a pretty meaningful reduction in depressive symptoms, and is like a pill that you can kind of take at home on yourself. So there are options like that. I imagine the treatment modalities, my guess is going to be both, right? So like even for J&J and their intranasal esketamine, you have to go into the office, you get this like intranasal drug, and you kind of wait there for a little bit and, get through kind of like the rough part of the symptoms, and then you go home. It's, I think the model is kind of there for that part of the commercial model, as well as like take it home and dose it yourself. And, I think there's probably going to be multiple options. Similar to GLP-1, I think differentiation is going to be a really big piece of this. How does, the company, two companies that are also using like the same core drug, but maybe there's like a slight formulation difference between them. One's deuterated, one isn't deuterated. The other one is long acting. The other one is, intranasal, et cetera, et cetera. I think that's going to be a big piece of it. But, for even right now, there's a lot of psychiatrists who are, opening up kind of licensed, ketamine clinics where people can come in and get generic ketamine and have like a guided trip experience, and people are seeing like really meaningful results for it. Obviously, like anything, you got to kind of do your own research and figure out how legitimate some of these places are. They're not all created equal, but I think the space will benefit a lot from more regulated products that have very defined treatment administration models. And I think the data is just so hard to ignore. I mean, it's just incredible data. There's going to be some like, not everything is going to work out, right? Like CNS is one of the hardest spaces to develop drugs in because of placebo effect
Mhm.
mostly. And so the nice part about some of these psychedelics too is like it's kind of hard to replicate the placebo effect for some of these, especially if it's something that's going to make you go on a trip. And so that's, it's something the FDA is going to have to contend with as well. Like, how do you properly randomize a study where it's very obvious when someone's getting placebo and someone isn't getting placebo? So a lot of questions still exist. But like we said it up front too, like the data is just really good, and it seems to be helping people. And I think the biggest companies aren't going to ignore that.
Yeah. Yeah. Makes sense.
Should I go to our last one? This is my last one.
Yes.
So my last one is this so-called farm-to-table model that like Lilly and others are pushing forward. I got really jealous of this, Kenny. I love a good pun. My Substack is called Big Pharma Sharma, and I was like, man, I should have called it Farm to Table. That would have been really good. But my wife is the one who thought of Big Pharma Sharma, so shout out to her. She did a great job with that. But Farm to Table that's a good. It's such a
I
great
do like
name.
that.
It's such a great name. Oh my God. I was just like, dude, great marketing right there. That's fantastic. If people don't know what this is basically, cutting big pharma companies, cutting out the middlemen and how they dispense drugs to patients. And you're seeing a major growth of this, especially in the GLP-1 space. So all of these companies are kind of partnering with telehealth companies. These are like the companies you see all the commercials for, right? Hims, Hers, Row, Lemonade, all these different types of companies who, you go to this online portal, you can get a prescription pretty easily for a GLP-1, you answer some questions, you take a couple pictures of yourself, and they'll prescribe you a weight loss medication. And that weight loss medication actually gets dispensed through Lilly. If it's a Lilly drug, Lilly Direct, like their own kind of online pharmacy, and you pay cash for it, and it's a very smooth, almost like tech like, CPG like experience where it's all online. You get updates about your order. There's like, nice instructions in the mail. It's like easy to refill your prescription. And so, Lilly at JPM was saying they've had over like 1 million interactions on Lilly Direct in a month, which is kind of insane. They're opening up in the UK as well and expanding to other countries. I mean, so, there's a couple things going on here, right? Like obviously healthcare costs are a really big problem in our country. And you're starting to see both like coverage of GLP-1s not keep pace with the demand of GLP-1s. And so people are turning to these cash pay models, these easier channels of getting direct to patient type channels. instead of going through their insurance that might not cover these drugs. On top of that, too, you're seeing insurance premiums go up, your deductibles go up, and you and I have encountered this like for ourselves as well as, being advocates for care for our loved ones. Like sometimes you go to the pharmacy and they give you a bill and you're like, dude, what is this? This is like three times the cost that I would be paying if I just paid with cash. And at some point the value just becomes, okay, I'm just going to pay cash for this, right? And unfortunately, not everybody can kind of like, afford the hit that cash hit, but there are a lot of people who can. And what cash pay kind of does is it creates pricing transparency in the market. And as new GLP-1s enter or new offerings enter, you can kind of price compare, and you get that clear sort of pressure to maybe reduce price to increase your market share, et cetera. And so it kind of opens the kimono a bit on like having a more clear and like not regulated, but clear and transparent market on some of these drugs. My point is not that like GLP-1s direct to patient, farm to table is going to grow. I mean, that's obvious. I think all of these companies view the consumer channel as an incredibly important commercial channel. My take is that this is actually going to expand significantly over this year to a bunch of other types of drugs, right? Like, what is stopping someone from going to get a blood test showing that, hey, my cholesterol's high. I'd like to get one of these PCSK9 drugs, right? Well, oh, well, no, you got to, step through statins, and then we got to do like bempedoic acid, and we got to do all this stuff. Someone might go like, dude, I don't want to go through all these steps. Let me just pay $100, whatever it is, and like go get this drug that I need, right? What's stopping, more drugs that like people know they need from being put in this channel? I think there are companies doing this. So maybe I'm kind of saying, maybe this will grow significantly. Like both worked at Gilead. HIV PrEP is like a really big thing. That's one of these drugs where like, hey, if you are in the community where that is a really significant and important drug you need to be taking to preserve your health, prevent yourself from getting HIV. Why can't that be done through, a direct to patient type model that is like all online, discreet? You never have to go into the office, and it can just show up at your door, right? So I think all these pharma companies, just with how like malicious some of these PBMs are becoming. I mean, there was a big post that went around social media about how PBMs basically created all these shell companies to harvest the rebates that they were getting. And to investors and to patients, they would say, no, we're passing the rebates on to you, but actually they were just harvesting a lot of them through these shell companies that they created. I mean, they are just like the worst parts of our healthcare system. But the worse and worse that gets, the smaller the gap is between like what you're going to go through with insurance with what you're going to go through with cash. People are just going to move towards going through cash. And it might be better for a lot of these diseases where something like weight loss is like very inherent to you, where you're someone who wants to lose weight, that, and you should be able to get easy access to something that is safe, effective, and is going to help you lose weight. Same with HIV PrEP, same with cholesterol, etc. And partnering with these telehealth companies and these channels that can kind of handle more of the tech aspect of it and the friction aspect of it is really smart by all these big pharma companies. I think we're going to see, you know, all of them who are kind of in these larger spaces go into that. I do still have my reservations about like some of these telehealth companies and how easy it is to get like a prescription for erectile dysfunction medication and a prescription for like anxiety medication and stuff without like really having a thoughtful discussion with a doctor about like, what is the right treatment for me. But there's a class of diseases where the agency of the patient and the knowledge that the patient has about their own body is paramount. And I think for diseases like that, this direct to patient farm to table model is perfect. And I think we're going to see so many more companies, so many more branded drugs flow through that model over the course of the year.
So I completely agree. The reason why I think that, by the way, the phrasing going back to the beginning of your prediction, farm to pharma, farm to table, is pretty funny. Maybe you can find another vehicle that would benefit from that. Shivu, one of the problems I think we've dealt with for a long time that has just gotten worse and worse is the PBM industry, the pharmacy benefit managers, who actually are incentivized for drug prices to be higher because if you think about just the percent rebate they get, a rebate off of $100 is bigger than a rebate, that same rebate off of $50. So they actually push some, in some ways, drug prices higher. I'm not a fan of PBMs. They say they use their negotiating power, like you say, to benefit the patient and then bring some of those savings, but they're also profiting a lot from that. They don't really do anything. So I like the idea of direct access. I don't know the legal mechanisms to this, but there's a part of me that wonders, is insurance going to be out of that the whole way? Does it always have to be cash? Could there be ways where insurance will do, like, let's say you go to Lilly Direct, you get a GLP-1, you're actually approved either by diabetes or, weight, whatever it might be. And then you can submit that and insurance might cover it. I don't know those rules. There's very finicky rules on that, and they might vary by state, by drug, by your comorbidity or whatever your pre-existing condition might be. But I have to believe going direct, which can be so much more helpful in terms of cost, is going to expand. And I'm delighted to see the industry is actually moving into that finally. Others, there was pushback for a long time, but I think by cutting them out, you save profoundly. And what exactly is benefited from that? So I agree with your prediction. It's not just that I agree, I hope your prediction is right because I think it's better for the sector. And oh, by the way, I love the idea of the patient having more control. That's also what this is. They go direct and say, I want that one. I want Monjaro because Ozempic is A, B, and C. That's something each patient should be able to do versus having it shoved down their throat for whatever reason. So I do think that's going to be the trend. I think because drug pricing is such a sensitive thing, removing players in the space who don't do anything is the way to go. I'm a little surprised the sponsors and drug manufacturers for all these years didn't do that sooner. But there are ways where I feel like that could help with this country's drug cost issue. And I do think that could be one of them. And now also, by the way, I will do anything to empower the patient. And I absolutely believe that empowers a patient.
Yeah, absolutely. I think it's a great thing. I think we need to be careful about like how easy it is to get a prescription on some of these telehealth platforms. Like we still don't want to create a system where it's easy to like abuse a drug. Abuse not in like the opioid sense of the word, but just, you don't want this to turn into kind of like, what before weed was legal, like how easy it was to go get like a marijuana card
Of
for,
course.
whatever type of disease, every other disease under the sun. But, patients should have agency. And I think
Yes.
especially when your insurance company is kind of failing you and making it so difficult for you to get a drug that you want and inherently that you need, cash, for better or for worse in our country, cash is king. And I think this is a perfect example of that, coming to life. And the market dynamics that will flow through after it with just the transparency, knowing that, when Amgen launches their GLP-1, their like, monthly GLP-1, they can sit there and look like, hey, like Lilly's charging $300 a month for their drug. If we want to get market share, maybe we got to do $200 a month. And that's going to be that's a decision that the patient now has a choice over, right? Instead, they might have been on an Aetna plan that doesn't cover the $200 a month Amgen drug, and they get forced into like a higher cost Lilly drug, let's say. Not, I don't know what their prices are, but let's just say that, right? Now you have agency, right? Now you can go, I instead of getting, the Lilly drug that maybe I'll lose more weight, this one's cheaper and I don't have to take it as often. So I'll just stick with that. Like you have you're more patients are going to have more agency because of these direct to consumer models. And I think that's really a good thing.
Yeah. Yeah. Great prediction on your part.
So that was it for us. I think we'll obviously keep track of our predictions over the course of this year and then, grade ourselves. Hopefully we do a little bit better. Also, I think we'll keep track of our 2025 predictions because I do think many of those might hit over the course of this year. So I hope you guys enjoyed this. Kenny, you have any closing thoughts?
No closing thoughts. I look forward to having more episodes that could potentially help folks and engage in the space more and also take control over their own health.
Awesome, everybody. So Shivu and Kenny out for Drug Dealing Pod. We'll catch you guys next month. Stay tuned. Like and subscribe. We'll have a lot of clips out on social media. Share this with a friend. If you want to learn more about the drug industry, how drugs are developed, how drug development people think about this industry, we're the folks for you. So like, subscribe, etc. And we'll be back next month. Let us know what you think about this episode in the comments.
Thank you, everyone.